Dear students, this is Mr. D. Prabakaran, Assistant Professor, Department of Commerce, St. Joseph's College of Arts and Science, Autonomous, Cuddalore. In this video, we are going to see the subject Corporate Accounting 2, Unit number 4, Holding Companies Account, Concept and Problems. We are going to see the concept of holding company. A holding company is nothing but a company which acquired the majority of the share from another company is known as holding company. So for an example, there are two existing companies, namely H Limited and S Limited. Here, H Limited acquired the majority of the share from S Limited. So the company which acquiring the majority of the share is known as holding company, from whom the majority share which has been acquired is known as subsidiary company. So as per the concept, the meaning of the holding company is a holding company is one which control one or more other company by the means of holding majority of the share. The majority of the shares, that should be minimum 51%. Controlling the composition of the board of directors, controlling a holding company with subsidiary company is called as holding company. In the problem, we are going to prepare the consolidated balance sheet. In order to prepare the consolidated balance sheet, there are basically 5 steps. Calculation of holding and minority ratio, calculation of capital profit, calculation of revenue profit, calculation of cost of control, and step number 5, calculation of minority interest. Let me go into see the problem, the type of problem in holding company account. In holding company account, the problems can be categorized under 4 segments. The first one, the share purchasing date is unknown or not given in the problem. When the shares are purchased at the beginning of the year. Third one, when the shares are purchased during the current year. And fourth one, when the shares are purchased at the end of the year. Here there are 4 types of problem. We are going to see the first type of problem. The share purchasing date is unknown or not given. So in this type of problem, holding company acquiring the share from subsidiary company. How many shares? Everything that will be given very clear manner, but there is no information or given on which date holding company acquired the share from the subsidiary company. So this is the first category of the problem. In case in the problem the share purchasing date is unknown, the capital profit information can be calculated by the information given in the adjustment. In the sum, if the share purchasing date is unknown or not given, the capital profit amount may be given in the adjustment in the form of profit and loss account and general reserve. Okay, we are going to see one problem under this concept. Problem by 18. Prepare a consolidated balance sheet from the following balance sheet. Here in liability side, the capital given H Limited 1,400, S Limited 1,000, creditor profit and loss account given. In asset side, sundry asset, shares in S Limited 900 shares at cost 1,125. So this is the information given in the balance sheet. In adjustment, on the date of acquisition of share by H Limited in S Limited, the credit balance on later profit and loss account was rupees 220. No dividend have been declared since that date. So in this particular problem, we can able to see that H Limited acquired the share from S Limited. How many share? 900 share. Everything are clear. But there is an absence of information regarding H Limited acquired the share from S Limited on which date. The date is unknown. The date is not given. Then how we are going to calculate the capital profit amount and revenue profit amount? So this is the problem. Okay, we are going to see the problem by step. Step number 1, calculation of holding and minority ratio. Here, H Limited acquired the share from S Limited. Therefore, how many shares held by the S Limited? There are totally 1000 shares. Out of 1000 shares, the number of shares purchased by H Limited 900 shares. Therefore, the remaining share held by the minority company, which means the S company, 100 shares. Now we are getting the ratio 900 shares, 100 shares. The ratio will be 9:1. Holding and minority ratio 9:1. Step number 2, calculation of capital profit. The capital profit is nothing but pre-acquisition profit. We are going to see in this type of category of problem, the capital profit information that will be given in adjustment I told. We are going to see in adjustment, they are very specifically given on the date of acquisition, the shares by H Limited in S Limited, the credit balance later, profit and loss account was rupees 220. This is what the capital profit, the pre-acquisition profit at the date of acquisition 220. This profit is going to distribute it to the holding company and minority company based on the holding and minority ratio 9:1. Then step number 2, calculation of revenue profit. In order to calculate the revenue profit, we need to see the balance sheet. The revenue profit is nothing but the post-acquisition profit, the profit which has been earned after acquisition of the share by the holding company. We are going to see in the balance sheet, the profit and loss account balance given in the balance sheet 320. This amount consists of capital profit as well as the revenue profit. What information we know? The pre-acquisition profit information. We are going to deduct the pre-acquisition profit out of the profit and loss account balance given in the balance sheet. We are getting the post-acquisition profit or revenue profit 100 rupee. This profit also distributed to the holding company and minority company based on the holding and minority ratio 9:1. Then step number 4, calculation of cost of control. In cost of control, we are going to find out either profit or either loss. Here the holding company acquiring the share from the subsidiary company, whether they are acquiring the share out of profit or out of loss. Okay, the face value of the share purchased by H Limited 900 shares. Each share value 1 rupee. In addition, H Limited share in capital profit 198. We are going to add 1098. This is the share value for which the amount paid by the holding company 1125. We are going to comparing. We are getting the loss. The loss will be taken as goodwill. If there is a profit, the profit will be taken as capital reserve. We are moving to the step number 5, calculation of minority ratio. Here the majority shares are taken by the holding company. Only the minority shares are held by the subsidiary company. So the number of shares held by the subsidiary company 100 shares. Each share value 1 rupee, 100 rupee. In addition to that, the S Limited share in capital profit 22, S Limited share in revenue profit 10. Altogether, the minority interest 130. So these all are the 5 basic steps that is requiring for preparing the consolidated balance sheet. In that next video, we are going to see how the consolidated balance sheets are prepared and the problem we are going to see when the shares are acquired during the current year. Thank you.